Thanks again, Tom, for having me back. It's become an annual feature and something I look forward to, especially with a sort of crowd like this. So, I mean, I've been thinking about our job really is to try and forecast the future as difficult as that might be. But to know really where we are going, it is important to first be clear as to where we have been. And I find that often there's confusion about that too. But if I were to really look back at the history of the post-World War II, what I find fascinating is that every decade there is some theme which captures the imagination of the world. And what's even more fascinating is that once that theme becomes well understood and sort of too hyped up, in the subsequent decade that theme almost never works. So we have this sort of recurring pattern where something sort of captures the imagination of the world one decade, and then the next decade it doesn't. So we have to be very wary of something which sort of captures the popular imagination of everyone. And what do I really mean by this? So if you look at it, last decade, the big theme in the world was the rise of the BRICS, the emerging markets, right? So that was what the hype was all about. You got one acronym after another coming out to try and capture the rise of the rest in terms of how rapidly the emerging markets grew last decade. In fact, in the entire course of economic history, last decade was the single best decade for developing countries in terms of their growth rates. Between 2003 and 2007 in particular, the growth rates of developing countries was over 7% on average. And we have never seen an era like that. And at the peak of it in about 2007, for the first time in history of all the 200 countries in the world, basically every single country grew. And there were only like a couple which didn't grow. I think Fiji, Fiji or something, basically who cares, right? So basically everything grew, like apart from maybe two very small countries. I hate to say that. So everything grew.
Killed our Fiji audience.
So in terms of, that was a fascinating thing. The 1990s similarly were all about technology in terms of NASDAQ, the tech mania which swept the world. The 1980s was all about Japan. We tend to forget how much hype there was about Japan in the 1980s, that the political campaign in this country in the late 1980s and early 1990s would all about be Japan. I mean, I still remember this very famous line. I think it was Paul Tsongas, in the former senator, who had a line that the Cold War is over and Japan has won, because it seemed that whatever Japan did, nobody else could do. And at the peak of their sort of prowess in late 1989, the Japanese stock market alone accounted for nearly half of the world's global stock market capitalization.
Wow.
Japan, right? 7 of the 10 largest companies in the world in 1989 were Japanese, mainly banks. So that's how powerful Japan was in the 1980s at the peak. In the 1970s, it was all about natural resources, gold, oil, all these countries which were sort of, into that really benefited. The 1960s was about America and the go-go stocks here, the Nifty 50, about the growth momentum out here. And the 1950s was all about Europe's comeback after being debilitated by the Second World War. That's what it was. So every decade, as you see, there was one big theme which captured the imagination of the world, particularly in investment terms. Last decade has been, or this past decade rather, which is not over as yet, has clearly been America's decade. And why do I say this? There are many metrics which suggest that. For one, the American stock market has been by far the best performing stock market in the world. In fact, the performance of the American stock market over the past few years has been so outsized compared to the rest of the world that today the American stock market trades at a 100-year high relative to the rest of the world, or close to a 100-year high, which is about as much data as we have, as far as data goes. That's how much the American stock market has done well. The American economy has also been doing really well. In fact, by many measures, the American economy hasn't done this well as it's done over the past few years. In terms of that, we have about the lowest unemployment rate in history. We have close to the lowest inflation rate still in history, and like about the highest consumer confidence in post-World War II history and highest small business confidence in post-World War II history. So that's how well the American economy has done and the American stock market has done. As a result, what you have today is that the American economy is still about 25% of global GDP, but the American stock market is 55% of global GDP, a 30 percentage point gap. So as a financial superpower in particular, America has never been this powerful on many metrics, whether it's the stock market or it's to even do with the US dollar. The dollar has never been this widely used. In fact, today, 88% of all transactions in the world involve the US dollar. 88%. So that's what makes US sanctions, financial sanctions in particular, such a potent weapon, that every time you have to sort of impose sanctions somewhere done by the US, it's impossible for any other country to avoid not being hit by that. And this is where I think that China has really underwhelmed as a financial entity, at least. China's, as we know, its economic rise has been incredible. It's sort of gone from being a very tiny player in the global economy to now being the second largest. Its share in the global economy is about 16% compared to the United States at about 24, 25%. But in financial market terms, China has in fact regressed over the past 2 or 3 years. In terms of a couple of metrics here. One, that the share of the renminbi in global foreign exchange reserves today is basically 1%. The US dollar is close to 2/3. That's how dominant the US dollar is. Similarly, if you look at the share of global transactions, how much of that is done in the RMB, that number is still minuscule and has regressed, in fact, since 2015, once China imposed capital controls to try and stem the currency's decline that year. So as an economic power, you've had an amazing rise of China. But as a financial superpower, China has sort of regressed in the last 2 or 3 years and remains a very tiny player compared to the United States. So this has been America's decade in every which way. In terms of economic terms, for sure, although there you can argue China obviously has done really well as well. But in financial terms, America has dominated almost like never before if you use metrics such as share of foreign exchange reserves held in US dollars, share of transactions done in US dollars, the share of the American stock market done in the global market capitalization. And China has been a major laggard compared to its economic might in the global economy. But as I said, that every decade when a theme becomes widely understood and becomes very popular, you know that is the time to pivot away from that theme. In fact, as someone gave me this great line, that the time that when you become too comfortable with something, it's time to panic. And so that's the mantra that I always follow, even as an investor, which is that when you become comfortable too much with one particular theme. So for me, the really big sort of trend that I think is going to play itself out over the next decade or so is that we could be close to peak America, in terms of the fact that America has done so well this decade despite the political narrative which hasn't captured that, because that makes it look as if this country is sort of not doing that well and stuff. But whatever else we may think, we could be at the climax of this trend. This decade has been building up into sort of America's decade, and the last year could be the climax of this trend. And why is that? Well, that's because the last year has been exceptional for America in many ways. The only economy in the world this year where growth has accelerated is America. Almost every other economy in the world this year, including those in Asia, growth this year has disappointed or decelerated. Almost every economy I can think of out there. And the reason why this has happened in America is because you had the tax cuts, you had other policy changes which were made, which basically sort of took a trend and further levitated that. But the sugar high of those sort of trends could now start coming off from next year. And I think that's why even the markets here are beginning to sort of sniff that and panic about that. So the big strategic sort of advice that I'm giving to people at this stage, for whatever it matters, is that it's time to pivot much more internationally. The American stock market is 55% of global stock market capitalization, but the American economy is 25%. The gap is 30 percentage points. The last time there was such a large gap was really between Japan and the Japanese stock market and the economy in the late 1980s, when the Japanese stock market, as I told you, was about 45% of global stock market capitalization, and the Japanese economy was just about 16% of the global economy. So peak America is something which I think is a fascinating theme for me and something which could play out next decade. And so Asia and many countries in Asia could possibly sort of benefit in the shadow of that as that trend plays out. But first, to be clear, this has been a very disappointing decade for Asia from a financial market perspective, at least. So if you look at it, this decade in dollar terms, Asian stock markets have produced a negative return. This decade, entire decade I'm talking about, whereas the American stock market has nearly tripled in value. That's the dichotomy between these two regions over the last decade or so. And in economic terms too, I feel that what happened was that after the big boom of the last decade, many of these economies have had to spend a lot of time cleaning up the excesses that were built up. In China, a lot of the excesses are still there in terms of the massive debt buildup that we've spoken about. But it's not been just restricted to China. India is still dealing with a massive sort of non-performing loan problem in its banking system. You have other countries also dealing with excesses from Indonesia to even Turkey, which were all built up last decade following the incredible boom that happened. But that could be now in the cleanup phase out there. So for me, that is something which represents the biggest opportunity as we look forward to the next decade. And then I'm going to make some specific points here about like the big global themes out there. One thing that we were speaking about as we walked in here had to do with, like, everyone's now very focused on March 1 or April 1. We don't know exactly what the date is as always, but somewhere there, that what's going to happen? Is the world going to fall apart after sort of, if a deal doesn't come through, or are we all going to be very happy once a deal comes through? As you can know,
US and China, just
yes,
right.
US and China, in terms of the big agreement which is supposed to come through. And sentiment on that oscillates wildly. Everyone woke up to Monday morning thinking that, some sort of a deal is there. And here we are on Thursday morning with a lot of gloom, following the arrest of the person, Huawei's CFO last night. And there's a lot of gloom that, oh boy, this is about to all collapse. And I just want to put this in perspective out here. For me, the big trend is this, which is that from about the 1970s right up until last decade, we were in an era of hyper-globalization. By hyper-globalization, I mean that the world was getting interconnected at a furious pace. And there are sort of four metrics that you can look at this. One has to do with trade. Trade as a share of global GDP expanded massively from the 1970s right up until last decade. Capital flows between countries expanded humongously in the 1980s, 90s, reaching a crescendo just before the global financial crisis of last year. Migration flows also expanded. And then the fourth one, digital flows, the interconnectivity that we saw in the world because of the rise of the internet and the flows that took place online of information. But what started to happen this decade is, and this is very important, this predates Trump. Trump for me is not somebody who is sort of, a person who's facilitating deglobalization, but somebody who's a symptom of it. Because if you look at all these four metrics had began to go into reverse gear well before Trump came into power. Trade as a share of global GDP has been declining this decade because various countries are putting up more and more non-tariff barriers or tariff barriers well before Trump came to power. Capital flows as a share of global GDP have declined a lot this decade because of the fact that banks have been much more reluctant to lend cross borders following the 2008 financial market meltdown. Migrant flows have slowed down. We know this very well. Even between US and Mexico, migrant flows have slowed down considerably. And fourth, even on the digital side, we're seeing a sort of balkanization of the internet as well, which is the fact that China is sort of forming its own universe and its companies trying to sort of form their own orbit, making more investments into countries from India to Indonesia as they try and sort of match up to the big tech giants of the United States. And if you go to China today, it really is a completely different existence. you cannot use any of the sort of daily sort of apps that we use here, or things like Google, Facebook, everything out there is banned when you go to China. And they have their own universe, and like in terms of how they do things and what they use, as you all well know. And they're pretty happy with it, in terms of pretty self-sufficient with that, at least from what I can detect out there. So it's quite incredible that, like we talk about digital like interconnectivity, and yet this balkanization has happened between these two sort of powers out there. So I think that no matter what happens in March or April, I feel this trend of deglobalization will last for a while, because that's the natural ebb and flow, which is that you get a very powerful trend of globalization, and then you get some backlash to it. And that backlash is what Trump is a symptom of in terms of what's happening across the world. So I think that lasts. We saw a similar sort of hyper-globalization take place in the late 19th century. And then in the interwar period, we saw a massive sort of retreat from that in what was an era of deglobalization. I think we are in a similar era, which started just after the global financial crisis, and something which is likely to last for a while, rather than end with one trade agreement or one trade deal, even if it's struck in the optimistic scenario between US and China in March or April. Now, I think that as far as Asia is concerned, as always, you will have some winners and losers in this. But one increasing theme that I'm finding in Asia, especially when you talk to US companies, and this is something which could have like important implications, is there's increasing talk about how they want to set up bases now, not just in China, but they want to diversify, because they know this tension, or they have this sense this tension is not going to end anytime soon. So the big beneficiaries of that, countries like Vietnam, countries like Indonesia, countries like Thailand, we are already seeing that supply chains beginning to move. The first signs of that are already beginning to move. Vietnam has been, like the mini China in terms of its manufacturing success story over the last decade or two. It's already done really well out there. In fact, I tell all my Indian friends there who sort of keep cribbing about the fact that, how we are, how things are sort of falling off, and they're not being able to benefit anymore from manufacturing, that countries like Vietnam and all are still doing very well on that front. But I think that the supply chains, we're seeing people tell me that the supply chains are beginning to sort of move, or people are beginning to set up factories now more in places like Thailand, Indonesia, Malaysia, to diversify their risk away from China out there. So I think that's one big theme out there, that, as they say, when two big elephants fight in the jungle, a lot of tall grass gets crushed, but there are also people who benefit. And I think that looking for the beneficiaries of the trade war is what I'm trying to sort of do out here as far as Asia is concerned. The other big theme for Asia next decade is going to be, or next year in particular rather, is that there are a raft of very important elections taking place in Asia, particularly in a 2-month time horizon of April, May. Yep. You're going to have India, you're going to have Indonesia, and possibly Thailand, all having elections just around the same time. And each one, I think, has very important implications, or will be fascinating to watch at least, even if the implications we don't quite know, and how they'll play out. In India, I think it's become a very competitive election. A year ago, the probability of Modi winning the election seemed like a shoo-in. In fact, even now it's talking outside, I think a colleague was saying that, is Modi like a shoo-in? Yeah, like a year ago, like it appeared to. Now it's a very competitive election in India out there. Because India, in fact, India has a habit of sort of coining its own words or popularizing its own English words. And I was just there in India, and once again, I was reminded that the most popular political term in India is something called anti-incumbency. And, what does that mean? And it basically means that there's a trend in India generally of being against the incumbent. So, in fact, since India became a multi-party democracy in the late 1970s, after the Congress hegemony of the 1960s and 50s, 2/3 of Indian governments have lost elections. 2/3. It's the mirror image of the United States. In the United States, 1/3 of presidents and governors who have stood for re-election have won their election. 2/3 have won the election in America. In India, only 1/3 have won their re-election. So there's a very powerful trend towards anti-incumbency in India because it's a very fractured polity, and the fact that no particular leader is able to get more than 50% of the vote ever. In fact, even when Modi won the election in 2014, at the height of the wave there, his party, the BJP, got only 31% of the national vote. But the fractured polity was such that they were able to get a majority of the seats in a parliamentary first past the post kind of system. But this time it seems in different parts of the country the opposition is coming together, which makes it more difficult with even 31% of the vote, assuming that remains stable, to try and win a similar number of seats in India. And more importantly, in India, what you find is that the state is so broken, the delivery mechanism of the service is so poor, that the poor and the people at large always seem to be angry with their politicians and want change every 5 years when they go to the polls. So therefore, India has the highest rate of anti-incumbency in the world, and that's what Modi will have to fight when he goes to the polls in April, May of next year. Indonesia, I think, is very interesting because I think that Jokowi out there is somebody who is widely seen as, as the moderate face of Islam, somebody who is basically, somewhat a reformer. And I think that, a possible victory for him, I have no idea as to what's going to really happen, but a possible victory for him will at least be perceived by the global community as something which is the fact that the country is, still sort of moving in the right direction or so. And then there's Thailand. I was just there, in fact, last month. I think that the amazing story about Thailand for me is that it goes through so many coups, so much political turmoil, and yet the economy is steady as she goes. Keeps sort of chugging along despite that, because its manufacturing sector is possibly the best after China in Asia in terms of its manufacturing prowess. So in fact, Thailand has been the best performing emerging market over the past decade or so. So it's really a very steady as she goes economy despite all the political turmoil and the street violence or stuff takes place, because the manufacturing sector provides a very important bulwark to that country. So I think that these are the, some of the big themes out there for me, which is that I started off by saying that this has been America's decade, but from both an economic and investment perspective, the next decade, I expect the rest of the world to catch up and to do better, because everything in America today is very expensive, from the US dollar to the American stock market, and everything else across the world is the mirror image of that, which is quite relatively cheap. And the economic cycles are at very different stages. America is now 8 months away from having its longest economic expansion in history, and the rest of the world has been struggling a lot. The second theme I spoke about was deglobalization. I think this is here to stay, regardless of what happens in March or April between US and China on the trade deal. That may provide some short-term relief, but that is a trend which I think is here to stay. And in that, I think that that both US and China over time may lose because of their sort of skirmishes and war, but a lot of other small to mid-sized countries ironically may benefit from that sort of trend, unless there's an absolute outright trade war where everything unhinges. And the third thing, as I said, is that it'll be a fascinating year in Asia to watch because of the politics and the fact that some major countries go to the polls around the same time in April and May, which I guess will keep Asia society quite busy in terms of tracking those polls. So those really are my opening remarks. You reminded me last time that I spoke for about 20 minutes, so that's what I've tried to do, and set the scene. And with that, obviously be happy to make this much more interactive.
Right, and thank you so much, Ruchir. Here come questions from online. You can see, for those who haven't heard Ruchir speak before, that he's ready to take any question about just about any country. I think you mentioned about 20 in your remarks, and any trend or issue on this front. I'll just follow with one, and I appreciate, Ruchir, what you're saying about the skirmish, as you call it now, between the U.S. and China. You've put it in the context of a longer trend, the deglobalization trend. And I also really appreciate what you said about daily gyrations. You're right. Monday morning, Tuesday morning, Wednesday morning, Thursday. It's only Thursday. Who knows what we'll be feeling on this front tomorrow morning.
Yes.
But if you can speak a little bit about not a daily investor who has to watch these gyrations, but surely beyond soybean farmers in the Midwest or steel manufacturers globally, if you can talk a little bit about the consequences of deal or no deal on this front, because surely this isn't just a skirmish, right? I mean, and particularly with Asia as a focus, China first and foremost, but let's say it's the Lighthizer tough line and we don't get anywhere, or this thing just slogs along and the big tariffs go into effect. What are some of the ramifications for growth in the year ahead?
No, I mean, undoubtedly, if you have a worst-case scenario where, like, no deal comes through, I think that, that's a very negative consequence for the global economy, which is very hard to model because, like, there are so many side effects of it which are hard to model. The economists will take the exact tariffs and see how much it goes up and you're like, what's the trade consequence? The numbers you come up with will be pretty small. It'll cut off 0.2, 0.3% of global GDP. But the sentiment hit beyond that is much larger. But I think that the reason why I take into account some of the daily gyrations is because I think the Trump administration is very sensitive to that. And that is, in fact, you can argue both a hope and a fear maybe, but also a hope.
Sure. I mean, somebody must have told him yesterday, you need to put something out because he suddenly, right, yesterday morning, I think, I lose track, he said, oh, looks like I'm hearing we might have a deal.
Exactly. So,
the day after an 800-point loss on the market.
Exactly,
right?
Exactly. So that's exactly what, like how he tends to behave, which is the fact that, so it's very hard for me to know whether this administration, I think there's a strategic plan which is there that in general, as far as the US is concerned now, and a broad feeling among the Western powers that, that China has sort of had too much of a free lunch and something needs to be done to change that. I think there is a broad strategic agreement on that, which cuts across party lines, even in the United States. I mean, I think that's one thing which you'll find. There's a sort of a, like a bipartisan feeling about that, in terms of that, something needs to be done about that, for good or for bad. But with the Trump and the administration, I always feel that, like it's hard to separate the tactical and the strategic, which is that market goes down, economy looks like too bad. I mean, will they be pretty quick to cut a deal? Okay, let's just cut a deal and sort of stabilize things and put a floor under this. So I think that's why it's so hard to focus on this deal, this March, April stuff. And for me, the bigger picture that we're in an era of deglobalization and this is likely to last for a while is possibly a better way of framing it. Because what happens in March or April, as I said, the tactical and the strategic are always getting conflated. That if the market goes down too much, that's a natural equilibrium process where the incentive for cutting a deal goes up much more for the Trump administration.
Got it. We have a lot of good questions coming in online, but I like to favor the room. When we start in the front row here, and we'll work our way around. If you can just say who you are and.
Yes, Joyce Slayton Mitchell. I work a lot in China, and I've heard you before, so I knew not to take a breath while you speak. If deglobalization is here to stay, what's that going to do to the Belt Road Initiative?
Yeah, I think that, like the Belt Road Initiative is something which I think there are two things there. That I think that there's a lot of hype about that, but what actually is happening on the ground is possibly a lot less than we think in terms of, what's going on out there. And the second thing is that I think that one thing we should not underestimate, that China has to deal with its own domestic slowdown just now. And its capacity to do a lot of this is going to be a bit constrained by that. I mean, one thing which we don't realize is that China, last decade, its foreign exchange reserves ballooned, right? They basically went from $1 trillion to $4 trillion. But in the last few years, those reserves have begun to come off. So we're currently at $3 trillion, and you adjust for the amount they've already invested in some of these countries, and the actual amount of liquid foreign exchange reserves could even be less. So I just feel that the One Belt, One Road stuff is possibly a bit overhyped, and it's possibly going to be constrained, I think, over the next few years because China deals with its own domestic slowdown and doesn't have the kind of coffers or the big sort of war chest that it once did.
There's an interesting Kevin Rudd here. Let's take Mr. Sharma in the third row. Just an observation. Kevin gave a talk about the U.S.-China relationship writ large yesterday, and he made the point in response to another question, not on the economics of it so much, but that the extent to which Chinese media and Xi Jinping himself have kind of toned down. It used to be that there was the Belt and Road had to be on every Chinese television newscast in some way, shape, or form, and that's really, he's noticed that there's they've stopped it because they know they have some negative PR around the world on that front. Your namesake, Mr. Sharma, here.
Yeah, Ruchir Sharma, and I'm a physician by trade or profession. Not an investor, but I just follow the politics and the stock market. My question is, I know the US dollar is very strong. In the last few years, India's GDP is quite good, has gone up. It's perhaps the fourth largest GDP in the world now. But the Indian rupee has taken a big hit. And I know all the other currencies have taken a big hit too, except Swiss franc.
Yes.
Swiss franc has not moved.
Yes.
But Indian rupee, despite good economy, good GDP, and growth rate, has taken a big hit. Could you please explain why?
Yeah, no, I think that as far, I mean, I think like you sort of have answered the question that the dollar has been strong against every currency, including the Chinese currency, like over the last few years. So I think that this has very much been, as I said, America's decade where the dollar has done well against every single currency. Now, as far as the like rupee is concerned, I think that you have to remember like one very basic sort of economic stuff. India's inflation has been much higher than the US inflation. So the rupee over time needs to depreciate just to retain its competitiveness, right? Otherwise, you have like erosion in the purchasing power. So I don't think that's, like, to me, that's surprising. Having said that, I think that over the next decade, I do expect the rupee's depreciation to possibly slow down because the dollar is so expensive everywhere that the competitiveness of the US is now beginning to get hurt because of the expensive dollar. But the surprise should not be there because India's inflation rate has been way higher over the last decade compared to US inflation rate. And so the rupee needs to depreciate to retain its competitiveness.
There's a follow-up online in a way. Maggie by email asks about India. India is on track to become a middle-income economy. How do you expect this to become a reality, and what is preventing India now from reaching its full economic potential? That's kind of a giant question.
Exactly. I mean, I think so. But, like as I've sort of mentioned to you in the past also, but that for India, my favorite line, which I keep sort of repeating, is the fact that this is the country that has consistently disappointed the optimists and the pessimists, right? So that's been the history of this country. And I think that we are at the same stage just now, which is that India will continue to chug along, but it's the reason why you can't get the sort of, Chinese-style 10% growth in India is because it's a very heterogeneous country, unlike China, which is a much more homogeneous country. India is, really sort of, with more than 6,000 castes and subcastes, with so many religions, and each state in India is a personality of its own. That it's a very heterogeneous country, that to sort of get this very strong top-down reform is almost impossible in a country like that. Now, that's just the reality of India, that to govern the country from a very strong way at the center is a recipe for trouble, because it's such a heterogeneous country. Like I find it so fascinating, which is that even for people like us, like you made a reference to this fact that I've covered elections in India, like over the last 20 years. I'd formed a group more than 20 years ago where 20 of us travel the country every year to cover an election. And what's fascinating here is that from one state to another, the patterns, the personalities all change so dramatically that it's very hard to have a national narrative about India. The subnational identities in India, to me, are very strong compared to the national identity as far as India is concerned. So the heterogeneity and the complexity that brings about makes it very difficult for there to be the sort of top-down reform to take place. On the other hand, there's enough entrepreneurial zeal and energy, which is there, which keeps the economy chugging along. So I think it's a very steady as she goes kind of economy, but not, but if you compare it to China, where you sort of expect major top-down reform, that's what holds it back. The fact that it's very difficult to get that kind of reform.
Not to mention anti-incumbency. Yes, the woman in the third row. If you can just wait for the microphone. Thanks.
Thank you very much for your tremendous remarks. My name is Kathleen Camilli. I'm a U.S. economist formerly from Wall Street, now serving on 2 public company boards, one in Canada, one in the U.S. So my greatest concern now, since protectionism is the theme of this decade upcoming, is the unraveling of the global supply chains. So could you talk a little bit about that? Because that's very important given that we have low unemployment rates.
Mm-hmm.
Yeah, so I think that, I personally think that unraveling may be too strong a term. The way like you happen is basically a rejigging of it, as I said, which is much more diversification and much more sort of regionalization and localization. That's how I think that you're going to get much more local and regional trading blocks rather than like anything which is global, and you're going to get a lot more sort of trade taking place within regions and neighbors rather than sort of cross country. So I think that the supply chains are going to be rejigged for this new environment. And unraveling is a very strong word. And unraveling basically could sort of bring the global economy down. I think that the stakes are too high for an unraveling to happen. So I think that it's much more subtle than that. Like as I said, that a company like in the US today, if they'd be sort of happy like a decade ago just setting up a large plant in China or 2 there or 3 there if they thought, now they'll sort of, want to hedge their bets. Maybe they do 1 in the US, maybe they do 1 in Vietnam, maybe they do 1 in Indonesia. So I think it's a rejigging of the supply chain which is going to happen. But this is more something which happens in a subtle, gradual way. Unraveling is something which I don't think sort of takes place out there. I mean, like it's easy for us to get scared about lots of scenarios, but I would be sort of thinking the stakes are too high for an unraveling to happen.
Shwini here. We'll try to toggle between left and right.
Thank you. Interesting remarks. And just continue on India again. So a lot of is being talked about their demographic dividend, which is there definitely, and that leads to a lot of consumption. Therefore, the economic growth will continue. That's the general theory. But having said that, the biggest problem, the fundamental problem, is giving jobs to all these young people, and jobs of quality, not the temporary jobs in informal sector, which is the current norm. So how do you see this playing out? India will be steady growth, as you mentioned, not too much of reform, not too much of control, which the current government tried to impose. So therefore, how does this play out, regardless of whichever government comes to power?
Right. I think like jobs is the big issue in India, and that's there. But I will say something here, which is that even in India, so one of the big themes I've spoken about here in the past is how the world's demographics have changed significantly over the past few years. That that the entire global economy saw a massive demographic bulge from about the 1940s right up until the early 2000s. That the reason the global economy grew so rapidly in this period was because of a massive demographic bulge. There was a baby boom virtually everywhere. Now we are beginning to see a massive sort of reversal of that trend, including in India. So in India, in fact, the fertility rates in the 1950s and 60s used to be about 6 per household. That's now down to just 2. So even in India, the demographics are coming off very rapidly. Still much better than the rest of the world. I mean, there are about 40 countries in the world today, I think, where the working age population is actually shrinking. India is obviously far away from that. But the demographic, like even in India, the demographics have changed significantly. So yes, the jobs requirement is still very significant in India, but I would say that it's that the fear about that is maybe a bit exaggerated just now, because the demographics in India too are beginning to change. So, but in India, as I said, that there's so much of like underemployment which just continues, and I think that just happens. Like, I mean, as far as India is concerned, that that's a trend which just carries on. So yeah, I think that this is the constant thing about India. There's always some negativity. We'll keep hearing about it, that this is not happening, that's not happening, and yet the caravan continues. I mean, out there. That just is the reality of that country, I think. One thing I was saying about India, like I'll make a side point, and that really shocks me, that normally if you have very high unemployment, you would sort of associate that with high crime, high social unrest in India and stuff. And one thing I've always find very remarkable about India, if I can say so, is that yes, in a large country there will be crime and there'll be stuff. I've traveled in India for every election for the last 20 years. I've done about 27 like election trips, each one for about a week. And we have travelled to the most remote corners of India in doing that. And the most remarkable thing I find is that our group as such has never felt unsafe. I cannot say that about so many developing countries. If I go to Brazil, South Africa, I'd think twice about stepping outside my hotel room. My hotel without proper sort of, knowing where to walk. I wouldn't, walk in Jardins in Sao Paulo or in stuff. And in India, we have traveled to the remotest areas in Bihar and like Tamil Nadu or whatever, and I've never felt unsafe. And for me, that just tells you so much about India, about the fact that, yeah, there are these problems, there are these things which continue, and yet the caravan rolls on.
That's a great index. I don't want to prejudice, but we've had so much on India, so if we can maybe say questions about other countries. Yes, sir, you've had your hand up for a while. You're in the second row.
The takeaway I have from what you're saying is that if in 2020 Donald Trump suffers a destructive defeat and we get back to a more normal and bipartisan situation here, it's not going to make very much difference in terms of where the United States is going, because these worldwide trends are going to overtake that. Is that your view?
Absolutely. That is my view. That, as I said, that Trump is a symptom of this, not a cause of many of the trends that we're seeing today. Yes.
Yes. Could you comment on what appears to be authoritarian regimes are more in favor, and right-wing populism is spreading around the world, and immigration is a factor in many of these countries? What are the implications of all that?
Yeah. Does it make any difference economically?
Yeah, I mean, the fact is, yes, it does. I think it makes for, so I did some research on this for my previous book, like The Rise and Fall of Nations, to know that do authoritarian or democratic regimes, what do they mean for economic growth? And the conclusion that I reached based on that was that, I hate to say it, but in pure growth terms, it makes no difference. Like in terms of authoritarian versus democratic. But it makes a big difference in terms of volatility. That democratic regimes, you tend to get much lower volatility in terms of outcomes. Under authoritarian regimes, the outcome tends to be binary, almost. Mm-hmm. It's because if you get a central leadership which sort of understands, economic reforms like China or other places like Korea, Taiwan before that, and they carry out the right economic reforms, great. Like you get great outcomes. On the other hand, in places like Africa, Latin America, you end up getting the wrong dictators or the wrong authoritative people in power. They sink the economy. So I'd say that yes. So what that makes for are much more volatile outcomes. But on average, the implication for economic growth, as much politically incorrect that may be to say, is basically negligible.
Let's go to the back. Yes, sir.
All the way?
Yeah. And then we'll pass it to you. Promise. Yes.
Okay, great. My name is Manish. I'm with the Yale Group. I'm involved with Yale's Global Affairs Institute. And I think we were at Morgan Stanley at the same time years ago.
Okay.
So I'm going to ask more of a challenging question. Some of this comes from actually a Bloomberg radio per speaker this morning, so just 2 hours ago. So his thesis was actually don't invest in developing markets. Laid out 2 or 3 themes that are believable, but maybe you can shoot holes in them. One was, if U.S. interest rates are going to be going up, that will continue to suck capital into the U.S., whether it deserves it or not. But the rates will inevitably go up, at least for 18 months, in his perspective. The second theme was longer, which was all the manufacturing jobs that are to be made have already been made. The labor-intensive, low-cost manufacturing jobs. As the robotics or AI components kick in, the delta based on the labor cost to manufacturing is shrinking. And as a result, you may have some shifting, as you say, from China to Vietnam to Indonesia, but no more job creation anywhere in the globe. So you don't necessarily want to seek the lowest, highest manufacturing cost. So that would be the anti-Ruchir.
The pushback to that, yes. Okay. So, like I always remind of that old line that the inevitable never happens, the unexpected does. So if you think it's inevitable that US interest rates are going to go up for the next 12 to 18 months, well, think about it again, right? Because, I think that given the high levels of debt in the global economy, the tolerance for, including in the United States, the tolerance for very high interest rates is quite low. And we're already beginning to see some negative effects of that in the fact that the housing market, et cetera, begin to slow down out here. So what he's saying is complete conventional wisdom today, that interest rates keep going up, capital keeps coming back to the United States. But like for me, a lot of that has already happened. The US dollar today is already very expensive. How much can this country take, like a more expensive dollar? Maybe this can happen for another 6 months or so. But whether this can happen for another 6 years, I doubt it very much. I think that if you look at the dollar's history, the dollar today is, as I said, as powerful as it's been. And it is going to get even more powerful from here. Yeah, it can. But for me, there's a feedback mechanism where it comes back to hurt, and so therefore it puts a cap on that. The second point about this jobs, I just don't understand what is the evidence of it so far. Do you know today, the global unemployment rate is close to an all-time low. So we've had this fear of robotics. We've had this fear of robots eating our jobs or taking our jobs, etc. And yet here we are with the lowest unemployment rate that the global economy has seen, or close to that, in the last 50 years or so. So yeah, I think that the best line I know of that is that jobs are never destroyed, professions are destroyed. Mm-hmm. So you'll have professions which are destroyed. But like human nature will always keep coming up with some new jobs, and including, so manufacturing, things may change out there in terms of what the jobs are and stuff like that. But I think that it'll go to something else, maybe services, maybe some kind of new services. And yes, things will change in terms of how things are. But I don't have this sort of gloomy view that we're going to all be unemployed, because of automation and robots and stuff like that. Yeah, but then, I mean, we in the end are in control of our own destiny. That if we are, going to be unemployed, who's going to buy the goods anyway that these robots are going to produce? So therefore I feel that, like the fact is, is the fact that I think there's a equilibrium mechanism to these things. So that's what would be my comeback to those 2 points.
So we're going to have robots waiting in unemployment lines.
Exactly.
I promise this gentleman here. Okay, and we need the microphone. Yeah.
Philip Pomper. I'm at Wesleyan University, professor of history, and my specialty is Russia. And this is the first time Russia has been mentioned in a long time. Russia seems to be irrelevant except to the President of the United States. And I wonder if you could comment on any possible role for Russia in these currents of change or stability.
I think that, in terms of what Putin has done is quite sort of remarkable in that he's basically fortified the Russian economy. So, which is the fact that he's paranoid about, like having a 1998 type experience. So he's fortified the economy, but in doing that, he's made it more and more insular compared to the rest of the world. And the problem with Russia today basically is that it is X-growth. There is no economic growth taking place in Russia today. So I'd say that as far as Russia is concerned, its role therefore remains that one of more of a troublemaker rather than anything else it can do. Because from an economic standpoint, Russia, is increasingly sort of irrelevant because it's sort of fortified itself, which is fine, means that Russia will never have the 1998 type experience. But from an economic growth standpoint, its potential growth rate is 1 or 2% just now. That is really something which is sort of, too low. How much the Russian people will take this, I have no idea. It seems that they have an endless capacity to take it. Maybe that's that. But from an economic standpoint, the reason we don't talk about Russia is because it really has become increasingly irrelevant, from a global growth game standpoint. And I just don't see what changes that because Putin has fortified it with very low debt levels, very low external vulnerability, but there's not much of a growth strategy out there.
We have time for a couple more. Why don't we take these two on the right, the gentleman here first, and then the one in the back.
I'm William Lemmy from Long Island University. The next decade, isn't it going to be about climate change? I mean, every year we put 35 billion tons of carbon into the air, and it's going up 2% a year. So this is going to affect the economy, every aspect of our life.
Yeah, I mean, that's like one of those truths. Yeah, that yes, this is a big factor, but how it's going to affect the economy, and for good or for bad, the changes still tend to be so glacial in terms of any economic impact on a yearly basis that to model that into any way is virtually impossible. So yeah, I mean, it's something which we should all be concerned about, but the changes tend to be so long in their nature and in the sweep that for us to try and model that for, what is the foreseeable future for good or for bad, because the changes are so glacial, is just too small for me.
No pun intended.
Yeah.
Glacial. But I mean, just a quick follow-up, coal, renewables, depending what audience you're talking to, I find it really interesting, and as a person with Polish heritage, a little depressing that there's a climate conference right now in Poland, and there's all this amazing talk about the renewable sector and going great guns, and leaders in Poland, inviting all these, because it's a big coal-producing country. I mean, do you, watching investment in those two areas, anything you'd like to prognosticate on that front? I mean,
no, I think so. I think that, therefore, I think that the good news is that all this is happening, and this is what now, keeps a cap on the price of oil and coal, like because of these new developments which are taking place. I mean, the price of oil basically sort of, like it appeared like a month ago, it was about to again spin out of control, and now it's back to reality, and it's basically flat. So I think that the good thing is that there is at least technology in some ways, whether it's shale, etc., has provided a counter response to this, and so therefore we're not getting that kind of, sort of mania that we got last decade. But as I said, that these changes tend to be, there's a lot of exciting opportunities there, but the changes tend to be sort of, over time, play themselves out gradually, that it's very hard to sit up today and say, okay, this is going to switch the dial.
And we let this woman here have the last word. Yeah.
Hi, I'm Sonal, and I work in the tech industry, and I'm trying to launch my own company. So I wanted to talk about the trends of deglobalization that you mentioned, and I've been noticing that a lot, right? So we're not trying to outsource stuff anymore. Also, the brain drain still continues to exist from so many Asian countries into Western countries like, from Russia, China, India. So I think I'm very curious about the Chinese model where they've walled up, so that they can build in-house and get their own growth going with companies. Do you think that's a good model, and is that what's going to, instigate growth again in these countries? Is that a good model to follow, you think?
I think it's a very exceptional model. I don't know how many countries can pull that off. So I think that what they have done. Yeah, I mean, there are other countries taking the lead in terms of trying to wall off the internet and stuff. But the fact that you can produce such a, I mean, remember that a country like Russia, etc., which tried it in terms of back in the 1970s and stuff like that, about having their own technology and walling themselves from the rest of the world. So what China has been able to do is truly exceptional. I just don't think that is something other countries can try and replicate or try and do. It's just very difficult for them to do. And even China now, we know, is sort of feeling more vulnerable because it is still importing so much of the semiconductors which is required to sort of keep that going in terms of the front end. That's where it's feeling really vulnerable in terms of the semiconductor. And the big push in China now is to sort of fix that by 2025 in terms of, because it's such a large importer. The semiconductor is the new oil for them to try and do that. So I think it's a very exceptional thing that they've achieved, something which is pretty commendable and surprising. But I just feel it's very difficult for other countries to try and replicate that model, because it's such a outlier in terms of what they've achieved.
I think we're going to have to start wrapping things up. I do want to remind folks, particularly who came in a bit late, if this has whet your appetite for a look at what the next year in Asia may bring, join us Tuesday night, where we'll do, markets are still on the table, but we cover just about anything that anybody in the room wants to cover, and our experts on stage. That's Tuesday night, and we'll follow with a reception that all guests to that event are welcome to. Thank you again for coming. Thanks to those beyond the room. And Ruchir Sharma, thanks again for a fabulous hour. Really appreciate it. Thank you.